Welcome to Trade on Point's Trade in 5 bite-sized guide to the Ichimoku Cloud. So what is known to traders as the Ichimoku Cloud is a trading system devised by a Japanese journalist in the 1960s. Now, despite the origins of this trading system being somewhat atypical, it is widely used by many traders today. The full name of the system, Ichimoku Kinko Hyo, directly translates to one-look equilibrium system. This gives us an indication as to the intention of this system. It is designed to provide a detailed understanding of market sentiment and trends, as well as predicting future movements at one glance. So let's have a look at a chart with the Ichimoku Cloud. As you can see, the system is a little more than just a cloud. In fact, the primary indication for a trader to enter a trade is a crossover of two lines, the red and the blue. These lines are known as the Tenkan-sen, the red line, and the Kijun-sen, the blue line. Effectively, these lines are a very basic type of moving average, or more accurately, a moving midpoint. The Tenkan-sen is the midpoint of the highest and lowest price over the last 9 time periods, while the Kijun-sen is the same midpoint over the last 26 time frames. The Tenkan-sen is more volatile and indicative of recent sentiment in the market, whilst the Kijun-sen provides more of a baseline. As the Tenkan-sen crosses the Kijun-sen from high to low, it is a sell or a short signal. Conversely, if it crosses from low to high, it is a buy or a long signal. The strength of this signal cannot be confirmed without the use of the cloud. The cloud, or kumu, is the area bounded by the Senku span A and the Senku span B. Both Senku spans are a projection 26 time periods into the future. This is the reason the cloud appears to extend beyond the current candle. What this means is that the cloud that relates to the current price is actually an echo of market sentiment 26 time periods ago. The span A is the average of the Tenkan-sen and the Kijun-sen projected forward, while span B is the average of the high and low over the last 52 time periods projected forward. If this sounds confusing, it's because it is. The cloud works with averages of highs and lows from 9, 26 and 52 time periods in the past, and then uses them to create an area of resistance 26 time periods into the future. If span A is above span B, the market is said to be rising or bullish, as the more recent sentiment is higher than the more long-term sentiment. If span B is below span A, the market is said to be falling or bearish, with more recent sentiment lower than long-term sentiment. The final component of the Ichimoku system is the Chiku span, the green line. This is a lagging span, and it's simply the most recent closing price projected 26 time periods backwards. This is why the Chiku span line appears to stop well before the current price action. There is some debate as to the usefulness of the Chiku span. It is intended to show, at a glance, how the current price is performing in relation to recent history. The price is said to be trending upward if the Chiku span is above the price, and downward if it is below. Most traders only use the Chiku span as a confirmation of any signal they receive from the rest of the system, whereas others will disregard it entirely. So in review, the crossing of the Tenkan-sen and the Kijun-sen provides a signal. This signal is said to be weak if the price has not yet crossed the cloud, moderate if the price is within the cloud, and strong if the price is already on the correct side of the cloud. The cloud itself can be bearish or bullish, adding weight to this signal. Finally, the lagging Chiku span provides an extra level of confidence by showing whether the current market is rising or falling. So let's have a look at two examples. In the first example, we can see that the Tenkan-sen crosses the Kijun-sen upwards here. The price action at the time is above the cloud, showing a strong signal. The cloud itself is green, which is what we've set to show that span A is above span B, and therefore the cloud is bullish. Finally, the lagging Chiku span is above the price action from 26 time periods ago. This confirms the market is moving in an upwards direction, and this is a strong signal to enter into a long position. In the second example, we can see that the Tenkan-sen crosses the Kijun-sen downwards here. The price action at the time is above the cloud, which indicates that this signal is weak. The cloud itself is green, which indicates an uptrend, whilst the Chiku span from 26 time periods ago is just below the price action, which indicates a downtrend. There's clear disagreement amongst the signals here, and so it would be wise to leave this short signal alone. So that's it for the Ichimoku Cloud. Feel free to comment below with your questions or any suggestions for future Trade in 5 topics. And as always, don't forget to like and subscribe. Thanks for listening, thanks for learning, and thanks for letting me help on the journey.